Hi, my name is Lyndsey Pachon. I'm a real estate broker and co-owner of Fall River Property Management. We specialize in the profitable management of C-class multifamilies in the Fall River and New Bedford, Massachusetts area. There is a vast amount of misinformation on the internet. This morning, I responded to an email from a client who was frustrated by our suggested rental price for his apartment. He stated that according to Google, the average rental price for a two-bedroom in Fall River was $1,900 to $2,000. Our data suggests otherwise, and we recommended pricing his two-bedroom unit at $1,500. When we price a unit, we try to strike a balance that allows for maximum profitability. We want minimum vacancy length and maximum monthly rent. Vacancy length is affected by the asking rental price, and knowing how to find this balance means truly knowing your market. Lower price, shorter lease-up time, but you don't want to price the unit too low because you'd be leaving money on the table. And it is an investment property, and money is the name of the game. And there's nothing wrong with being profit-minded, even though many people would like you to think otherwise. When selecting a listing price, there's the unquantifiable factor of desirability and attracting a good tenant, not a desperate tenant. I've yet to find a way to quantify this, but maybe someday. I recently went down a rabbit hole trying to actually quantify the profitability of pricing a unit correctly and not overpricing it. The overpricing a unit causes a prolonged vacancy. You wouldn't know this about me, but I majored in biology, and one of my favorite areas of concentration was biostatistics. I love data analysis, and I find it so very satisfying. So today, I'm going to dig into the data and get a little geeky about leasing. My favorite thing about statistical analysis is that whether you're analyzing the effects of a catalyst on a molecular reaction or analyzing the impact of a price point on the duration of a vacancy, the math is the same. I tell my son often that there is nothing more perfect in this world, or there is nothing perfect in this world besides for math. So let's take a look at some data I pulled off Zillow. I searched the listings for two-bedroom units in Fall River. Immediately, I was met with misinformation. The search, as a default, sorts the rentals by recommended. And it just so happens that Zillow's recommended listings are not at all representative of the housing demographic in Fall River. The recommended listings were not for C-class multifamilies in working neighborhoods. The first 10 or so two-bedroom units listed on Zillow were priced over $2,000 and were located in newly renovated mills or new apartment complexes with gyms and pools and jacuzzis. Ooh. Recommended equals sponsored. So I sorted by price, and I was able to see a selection of vacancies that actually look like the properties in Fall River. I pulled the price and the length of the listing, and I used this data for analysis. The length of a listing is for current listings. It doesn't give the total vacancy length because the units listed are not yet rented, and we don't know when they will be rented. So we're using this data to compare vacancy losses at listing prices, not to define them. The question we're trying to answer here is, what is the correlation between listing price and listing length? We're asking the question with the hope of developing a data-driven pricing strategy for maximum revenue. After calculating average dates listed in each price range, the following trend was observed. This here is a direct correlation between the length of the listing and the price of the two-bedroom apartment. Look at this graph. It's like elegant. Apartments priced under $1,500 were listed for an average of 18 days. Apartments priced between $1,500 and $1,600 were listed for an average of 24 days. $1,600 to $1,700 apartments were listed for 26 days. $1,700 to $1,800 apartments for 36 days. But, not surprisingly, two-bedroom apartments and multifamilies listed over $1,800 were listed for an average of 76 days. And when you charge more for the unit, you can afford a somewhat longer vacancy, right? But how does your profit at a higher rental price hold up to the losses caused by a prolonged vacancy? Where is the sweet spot? The data showed that an average rental price for a two-bedroom was just under $1,600, but we're going to call it $1,600 for ease of explanation. To analyze the relationship between vacancy and listing price, we need to translate the length of time that a unit is listed to the same language as listing price: money. How much money does it cost the owner to be listed for a given amount of time? The cost for the time is listed here. And as you can see, it grows substantially in the $1,800 plus price range. If the unit is priced at the average listing price for a 2-bedroom, which is $1,600, the cost of the listing time frame is $1,408. Look here how the listing cost skyrockets over $1,700. Now, this doesn't mean that every landlord in Fall River should price their 2-bedroom at $1,699 and expect it to rent fast and expect that you've maxed out your rental value. But what it does mean is that your individual apartment, with its amenities and with its flaws, has a value at which it is competitive on the rental market. On average, a 2-bedroom is worth $1,600 to $1,700 in this market. But if your apartment has smaller than average living space, deteriorated finishings, is located in a high crime area, you need to adjust for these characteristics so that a qualified tenant sees your listing and says, yes, I'm getting good value at this price. I would be well served to move here and stay. Just as there's a point where a high price drives away qualified renters, there is a point where the low price costs more money than you make up for in the short listing time. You know who messes up the data though? Owners and real estate agents who are not being selective with their tenant selection process. There are plenty of people that I could rent your 2-bedroom apartment to for $2,400. There are so many people who are willing to sign a contract and not hold up their end of it and just wait to get evicted. Way too many people. So I'm talking to the people who have skin in the game. The buy and hold owners want to minimize their vacancy rates and reduce turnovers. So we have pulled a list of 2-bedroom apartments currently listed in Fall River. The average asking price for 2-bedroom in Fall River, according to this market research, is $1,600. We're reviewing here. As we have also verified, there is a correlation that tells us that the average length of time that it takes to rent a 2-bedroom apartment increases drastically for units that are priced above $1,700. So let's say it takes 75 days to rent a 2-bedroom unit and the unit rents for the listed price of $1,800. Do you lose more in rent during the prolonged listing period than you gain by collecting a higher monthly rent? Yes, I did the math for you. Listed it for $200 a month, higher than the average price. So you will bring in an extra $2,400 for a 12-month period. But you missed out on rent for 75 days instead of 26 days. That 49 days of extra vacancy cost an over $2,600 in rental income. You lost more for extended vacancy than you gained in higher rent. For units over $1,700, you are collecting more rent but making less money. It is a lose-lose. Don't do this. Now, I was once told by a mentor that a higher priced apartment will attract a higher quality tenant. Verbatim, he told me, a $600 tenant is different than a $1,000 tenant and they'll care for your property accordingly. But it's easy to call yourself a mentor and still be wrong. And my experience tells me that this theory is wrong. I firmly believe, based on experience, that better tenants compete for the best value in their price range. And the better value you can offer in your apartment, the more selective you can be when choosing a tenant. So the data here shows that you max out your value for a 2-bedroom in today's market in Fall River over $1,700, but when you factor in that unquantifiable factor of attracting a marketable tenant who can compete for a unit that offers good value, it becomes clear that for an average 2-bedroom multifamily in this market, you are best off pricing the apartment at the average market price, not higher. Don't forget to account for the amenities and flaws and adjust accordingly. So what is the takeaway? This is a very specific data set relating to 2-bedroom units in Fall River, but the theoretical impacts on price point as told by this data analysis are pervasive. Renters dictate the value of the unit, not the owner, not the bank, the renters. Because if no one will rent it and it sits on the market, it just isn't worth the price you are trying to charge. This is capitalism doing its thing. I hope you found this helpful. I wish you a beautiful day and successful investing. Thank you.